What's up guys, welcome back to DCA. So what we're gonna do in today's video is take a look at where we're sitting at right now in this market. Now we all know that in the middle of April, we got up to 31K. And since that time, over the last 10 days or so, we've had quite a large drop. You know, the price has fallen down all the way to around 27K. So as per usual, what we're gonna do in this video is dive into how we got there. We're going to look at where the selling's coming from. Where's this sell pressure coming from at the moment? And is it something that you need to be worried about? We all know there's multiple types of sell pressure in this market. In general, going to be short-term holders and then smarter money long-term holders. Now, that's not to say that if you're exclusively a short-term holder that you aren't part of the quote-unquote smart money. In general, the longer-term holders are going to be the ones accruing large profits over longer periods of time, right? Because they tend to be individuals who are buying in these bear markets and then selling as we move into the bull runs. And we've shown that many times on the channel. So we can actually dive into the numbers and determine where is the selling coming from, who is doing this selling. Because if you start to see selling from longer term holders, that is typically going to be a very bearish sign for the market. But if you're only seeing that the selling's just coming from people who bought a week or two ago, bought down here at 27K, some people bought here at 24K, and then even some of these lower prices that we saw back in January and February. If you're seeing all the selling coming from those locations, that's entirely to be expected. And you're going to see that type of turnover throughout all market cycles. So by looking at this, it can do two things for us. It can tell us how we got to where we're at right now. And in addition to that, it can show you how the longer term, smarter money investors are thinking about this market. So with that said, guys, let's do it. Okay, so what we're gonna start by doing is taking a look at where this selling has been coming from. So we can do that. We can separate the long-term holders from the short-term holders. And just a very rough idea of what that is, it's typically around 5 to 6 months. If you've held Bitcoin for 5 to 6 months or longer, you get classified as a long-term holder. And we can specifically see where these Bitcoin are being mobilized from. So if a Bitcoin last moved on the network back at, let's say, 40K, and now it's been mobilized again, we can tell that that is a long-term holder, and now they are moving them again in order to sell. And so we can see that across the network. And that's what we do in order to understand, where is this selling coming from? Is it just from short-term holders, people trying to grab a quick profit, or is it from long-term holders who are now starting to get panicked because of, whatever number of factors that are happening? So we see that there's essentially these long-term holders, there's a wide range of prices that they've been selling from. But we see that these guys have been selling right in here. So we're talking about the 19K all the way up to around 24K level. And, if you look back at the price, we can see that that covers a wide range of times, because we were up to 18K all the way back in 2017. And, we've been at various points in the market cycle. We've been up to this 20K level. And you have to remember, anyone who owns above that, around 19K or 18K, whatever it was that we hit back in 2017, anyone who owns at a higher level than that bought in this market cycle. So these tend to be, while they are long-term holders, they're newer long-term holders, right? They're not guys who bought back in 2014 or back in 2015, prior to that bull run that we went on into the 2017 cycle. These guys in this zone are going to be this cycle's long-term holders. So, they've kind of held through thick and thin at this point, but you're seeing a little bit of selling here. But I want you to notice something, and this is important. The selling that's been going on here, we're looking at, this is 500 right here. And none of these even reach up to 500 coins, other than kind of these two levels right here, or, 2 or 3 levels, right at around the 40K zone. So from around 40K up to around 4750. In addition to that, we have a little bit of selling right at around that 20K zone. So some of these guys probably bought in this cycle and they've taken some profits. Then we have down here at 9K, and we see that, a fair number of coins yet again, around 3750, 3,750 coins were sold at this level. And then some super old coins. But these super old coins, you're always going to see selling from there, because, you can look at any given day, and you have to imagine these guys have tons of coins, right? There's millions of coins. The vast majority of the Bitcoin supply sits at a price of under $500. And then another huge chunk of it, millions of coins, approaching around 4 to 5 million coins are sitting at $1,000 or under that. So overall, what we're showing here is the total number of coins that were just sold since we hit this peak comes out to around 45,000 to around 50,000 coins. All right. So that's the total number of coins that we just saw get moved from the point where we reached that 31K level, 45 to 50K. Now let's take a look at the short-term holders. Okay, so this is the short-term holders of Bitcoin. And this kind of tells you all you need to know. I've put the long-term holders and the short-term holders onto the same chart. And what you see here immediately tells you the entire story. The reason that we have seen the price decline over these last few weeks, so going on 10 days now, it has nothing to do with the long-term holders. You can barely even see these numbers anymore, right? All of this selling, over 90% of it is coming from the short-term holders. So we've seen around from that 17K level, that are actually around 16K through around 18K, we've seen 175,000 coins, 40,000 coins, 30,000 coins. Okay, so you have around 250,000 plus coins that have been sold from that 17 to 18K, right in there, that 16 to 18K level. Then you have another around, let's see, we have up to 120 and then another 70. So around 200,000 coins right here that were sold from that 30K level. And then, if you look at these, you have probably another 50K or so in there. So what this is telling us is around 500,000 coins have been sold just over the last 10 days or so from only the short-term holders. And you've seen a lot of the sell pressure coming from two locations, from these people that bought back here at 16K, 17K, 18K, and then the people that bought at around 29 to 30K. This is not surprising, and it's not very concerning to me. Now, like I said before, if we were to see the long-term holders, these guys selling, that's where your sell pressure was coming from. And remember, these guys have a massive number of coins. The long-term holders own a majority of the supply, where the long-term holders are the primary holders during bear markets because retail exits the market, they panic sell, they bought at the wrong time. And then what happens? The long-term holders begin to sell into the bull market when the price starts rising. And when I say rising, I don't mean from 15K up to 30K. I mean, once we start getting to 45K, 50K, 60K, once we start pushing into 70K, you're going to immediately see these long-term holders begin selling in large quantities. And you're going to see those numbers start to dwarf that of the short-term holders. But right now you have the smart money, dumb money dynamic playing out. Like we see in every single cycle, there's nothing unique about this cycle in this regard. There are some unique facets of this cycle, but by and large, what you're seeing right now has played out in every single cycle so far. I've talked about this particular fact numerous times. So what I want to do next is show you a very easy way to look at this. Okay, so anyone who's been watching this channel for a while, you may remember this diagram that we've showed before. So we're going to talk about how this metric works, what it is, and why it's so useful. It's a very quick and easy way to look at what we just showed in a kind of a big picture sense, and it really helps you to compare cycle to cycle. Because when you look at what I just showed there, you would have to be watching the market dynamics on a daily basis. Now, if you're watching DCA, you'll probably be apprised of what's happening because that's the kind of thing that I do. I'm watching that type of metric every single day. But this is a way that, if you just want to look on any given day and you want to know where we stand relative to prior points in a given cycle or even past cycles, this metric can help you do that. So this is the coin days destroyed. And just to give a quick example here, we have 4 investors. Juan, friend of the show, Len. Len has actually contributed a large number of the subscribers by live streaming this channel. So thanks, Len. And he doesn't like to have his actual name used, so we'll use Len. We have George and we have Carl. Okay, so these are 4 different investors. Now, Juan, he fancies himself a short-term trader. So he buys a large number of Bitcoin, but he quickly moves it. All right. So he owns 10 Bitcoin. Now, Len, he makes a ton of money from other people and they give it to him on a monthly basis. So he doesn't really invest in Bitcoin that much anymore. All right. And in addition to that, he thought the cycle was going to be way longer than it was. So, he hasn't been buying that much Bitcoin. So it didn't really work out for him this time. So he only has a quarter of a Bitcoin. Now, George, I don't know what George is doing. Okay. So sometimes he has a lot of Bitcoin. Last time we looked at him, he had around 100 Bitcoin. This time he's down to 0.1 Bitcoin. All right. Carl just makes YouTube videos and he doesn't own any Bitcoin, but he drives around in his dad's Mercedes. So you think he owns a lot of Bitcoin. So we're going to look at each investor now and give them a hypothetical number of days. So Juan, like we said, he's a short-term investor. He's only holding for 10 days. And so he sells that Bitcoin after holding it for 10 days. Well, how many coin days destroyed did Juan contribute? And it's going to be 100. So it's going to be the number of Bitcoin you own times the number of days that you've held them for. So he bought 10 Bitcoin 10 days ago. When he moves them again, that's going to be 100 coin days destroyed. Now, Len, he owns a quarter of a Bitcoin. Okay. So he's been holding it for 400 days. So when he goes to move that Bitcoin on the network, well, you can do the same formula, 0.25 times 400. So that's 100 days. Now, this is really the important point here. Notice that George, he only has 0.1 Bitcoin. It's less than the other two investors. He has less Bitcoin than the other two investors. But importantly, he's owned it for 2,000 days. All right. So when he moves just this 0.1 Bitcoin, it is going to destroy 200 coin days. And this is important because this makes the point that a smaller number of coins destroyed from a long-term holder compared to these relatively shorter-term holders here. These coins are going to contribute much more to the coin days destroyed. So that's the key concept you have to keep in mind. So what that tells us is this metric, we will see large spikes in this metric when the long-term holders are mobilizing the coins. Okay, so this is the metric. And now the last thing I want to point out, there's one more little layer to this that I want to just quickly talk about. And that's that this is the adjusted coin days destroyed. All adjusted means is it's divided by the number of circulating coins at any given time. So, as the supply increases, you'll just divide whatever the total value is on any given day by the number of circulating coins. And so it gives us a way to compare cycles with a relative value. You can look at this cycle and compare it to the 2017 cycle or compare it to the 2013 cycle, and you're comparing apples to apples because you're dividing by the actual number of total coins on the network. And so what you can see is a very common trend occurs in each one of these cycles. You'll notice that during the bear market, what happens to the adjusted coin days destroyed? It completely drops off the map, right? So we're all the way down here. So, we're talking, here's our price, right? Our price is in this aqua color. And then we have in pink, the adjusted coin days destroyed. During the bear market, we're all the way down here. And you've kind of seen that in this cycle. There are a few of these little peaks, but for the most part, during the bear market, we have been sitting down at these lower levels, kind of below 5 on average, with only individual price peaks. And the same thing happened back here in 2014, 2015, into 2016. But notice what happens. Once we start rallying, that's when this really kicks up. And remember, who is making a metric like this really spike up? And it's the long-term holders. It's not going to be your short-term holders. All right. It's long-term holders because the short-term holders simply can't, if you're only holding for 10 days or 20 days or 30 days, you're not holding long enough to really move the needle here. So it's these guys who have been holding for hundreds of days or thousands of days in some cases. These are the ones that are moving the needle, even with a smaller number of coins. So remember, George held 0.1 coin for thousands of days, and he destroyed 200 coin days, compared to Juan, who owns 10 Bitcoin, but he's only held it for 10 days. So he took that short-term profit and he only destroyed 100 coin days. So George's moving of his 0.1 coin is much more significant than Juan moving his in 10 days, because Juan maybe already started shorting Bitcoin immediately after that and has been taking profit on the way down. That kind of guy is going to constantly be moving coins around. Whereas a guy like George is going to just be sitting on his coins long term. And when is he moving them? Well, let's take a look here. So if we look back to 2017, you see that the smart money is kind of standing by. They're not really trading during the bear market. You see them just sitting on the Bitcoin. That's why this metric is very low. Then once the price gets above this prior all-time high at around $1,000, what happens? You see this metric really start to kick up. And it's once we get up to, into 2,000, 3,000, 5,000, and even 10,000, that's when the long-term holders are really moving their coins. Then we go into the bear market, and what happens? The long-term holders stop selling and they start accumulating. They are accumulating at 6K, 10K, 7K, and then especially once we drop down here to around 3,500, you see another big spike. But keep in mind, anytime you have a massive drop off like this, that was very likely a long-term holder who liquidated a large number of coins, and that's what we saw. But you see these this starts to spike again, and this is long-term holders really beginning to move their coins as we're going on this rally up to 10K again. That is what you're seeing here. You kind of saw an event like this with FTX, but not to any type of degree that you saw back here at the end of 2018. But, to a lesser degree in this cycle than we saw back at 2017, right when we started to get towards this all-time high at 10K, then we're driving up to 12K, 15K. Once we started getting into those values, you saw the long-term holders right here. You saw them step in and decide to start selling their Bitcoin yet again. Okay. So exactly what we expect to see. Then once we start to kind of move towards the bear market or a sideways market, there kind of was an expectation in this cycle that the price would go higher. So I think you started to see a lot of the long-term holders kind of sit back and say, okay, well, we're going to wait again for another spike in the price. And that's kind of why you saw this drop off even as we went through sitting at 50K, because the long-term holders are typically going to move coins with respect to price jumps. So if we're just kind of sitting here at 50K, well, they're waiting for that next move, and it never happened to come this cycle. So we got this initial spike, right? Kind of just like you saw here. We got this initial spike, but then we never saw that mass number of long-term coins move in this cycle. So these people that have been holding for years now, a large number of them just continued to hold. And then as we went into the bear market, you see that most of the movement is going to be from short-term holders. So throughout this entire period where we've hit this all-time high at 69K, you have not seen a huge number of long-term holders at any point really start to mobilize. Now it has happened, especially given all the liquidation events we've had. There has been some selling from long-term holders, but it hasn't been in any sort of mass exodus from Bitcoin. And that's because a large majority of them are just kind of sitting back, accumulating Bitcoin, waiting for the price to start to drive up to 50K, 60K, into 70K plus. That's when you'll see this metric yet again go on a large spike and indicate that they are taking profits that they've been accumulating really ever since this bear market started. I suggest that, if you're someone who's interested in this type of thing and you're interested in understanding the dynamics of the smart money versus the way that short-term traders and, people that panic sell, that type of thing, this is really a lesson in psychology here. Smart investor psychology. They are sitting back accumulating during these periods. It's why you see these drop-offs, and they're mobilizing their coins and selling right when you start to get to that all-time high level. Understanding the fact that we are in a bull market. So I think this is a great metric. It's educational and it's informative. And, those are the type of metrics that I like to really show on this channel, because not only can this metric help you kind of pick your timing better, but it can be informative and help you literally be a better investor by understanding how longer term investors who make much higher profits in general are thinking about these markets. So that's going to be it for this one, guys. Until next time, as usual, see you.